Okay, so we're going to start off with a ordinary level junior certificate question. It's the 2010 year and it's core limited. So as I say, the easiest marks are always with the title. Title must be written in full, no shortcuts. So the trading profit and loss and appropriation account of core limited. I'm going to just fit it in here. So core limited for the year ended, this one is the 31st of December 2009. Easiest marks in the paper must always be there. The next thing we're going to see, look down through the question and see if there's any sales or sales returns. Now you'll always find that there may not be sales returns. In this question there's no sales returns, so I can take out the sales here and we're just going to put in sales. Now if there was sales returns we would do the working in this column and bring it out to the third column, but we can bring the sales, the cash sales, straight out to the third column. That's 195,000 euros. Then we have come down to our cost of sales. We have our sales, but our sales didn't come for free. It cost us to make those sales. We had to buy in goods, we had stock left over from last year, there was maybe some carriage and some customs duties. So how much did it cost us to make those sales? And that's what we're going to find out down here. So the first cost was the stock that we purchased last year, the opening stock, which in this question is 12,650. Also there was purchases. No purchases returns. If there was purchase returns, I'd take away the purchase returns here and bring it out to the second column. But I can get rid of the purchases returns and bring the purchases straight out to the second column. And that is 123,650. Now I'm looking down through the question. I'm going to see, is there any carriage inwards in this question? And I see that there is. And in this question it is 2850. I'm also looking to see, is there any customs duty, sometimes called import duty, on the goods? And I don't see any in this question, so it doesn't have to be included. So I'm going to add these three figures together. And when I do, I get what's called my cost of goods available for sale. The stock I had at the beginning of the year, plus my purchases, plus the carriage on those purchases, is the cost of everything I had available to sell to the public. However, I did not sell everything I had available to sell. I had some stock left over at the end of the year. And that's called closing stock. And I take that away because that should not be included, because it's not a cost of sale. I didn't sell it. So we take that away to get our cost of sales, which in this question is going to be, just trying to do it in my head here, and it is 117,650, if I'm not mistaken. Yeah, 117,650. Okay, so I have my cost of sales, what it cost me to make my sales. Here's my sales figure up here. So my sales less my cost of sales will give me my gross profit. And you can see here what I've shaded in yellow here, that is the trading account done. What was my profit from my trading activities, from my buying and my selling? And I found out here that I made 77,350 from my trading, from my buying and selling. However, that isn't the end of it, because there are other gains and expenses that a business might have. Now, in this question, I don't see any gains at all. So I think there's just expenses in this question. So I'm going to take out the gains. Normally you would add the gain to the gross profit and then bring your total down here. But in this question I don't see that there are any gains. So I'm going to get rid of the gains out of the question here. And I'm going to go straight to the expenses. Now, the expenses of this firm. So the first one I see is insurance, and I'm going to bring it out to the second column here. So 7550. The next one is wages, which is 371000. The next one is heat and light, which is 6800. And the next one is delivery expenses. Sometimes we call this carriage outwards, the cost of delivering your goods to your customers. And that is 8950. And the next one is advertising. And I think that's the last of the expenses in this question. That is 7200. So as I said, I add those expenses together, and in this question they add up to 67,600. Now, to get my net profit, I take my total expenses away from my gross profit, or whenever I had a gain, I would add that to my gross profit, and then take the total expenses away from that figure. So if I take my expenses away from my gross profit, I get a net profit in this question 9750. So that is the profit and loss account done. So the yellow part was the trading account, the green part was the profit and loss, and the final bit we set up here was the appropriation account. Now we know to appropriate means to divide. So some of the profit gets divided up and is given to the shareholders. So the dividend paid in this particular year was, if I look at the question here, is 1250. So they pay out some dividends, and you take that away from net profit to get the retained earnings, or some people call it the reserves. And that figure we're going to use later on in the balance sheet. So the second half of this question asked us to do the balance sheet. So we're going to flick over to the balance sheet now. Now the balance sheet is a snapshot of a company's finances on a particular day. It can change from day to day. The first half of the balance sheet looks at what a company owns and what it owes. And the second part of the balance sheet, the finance by section, looks at where the company got its money from to run itself. So we're going to go through the balance sheet now, and again the easiest marks here are the title. The balance sheet of Core Limited, as at, or some people write on, because as I said before, it's a snapshot on a particular day, and it changes from day to day. The trading profit and loss account was for a year ended. We were finding the profit for a period of time. The balance sheet is done on a particular day. Now I've labelled the first part of the balance sheet is where we put in the fixed assets of the company, the long-term assets of the company, assets that don't change value that regularly. Now, and I have three columns here: cost, depreciation, and NBV, which stands for net book value. Now, the reason I get you to put these in is because we use these first two columns when we're doing higher level questions, and I want you to get into the habit of doing it. But for the moment we can ignore the first two columns. Now, looking down through this question, there are three fixed assets in this question, and the first one is premises. So I'm going to put that in here, and it is, in the last column, and it is 120,000. The next fixed asset is furniture and fittings, and I'm going to put that in the last column, 17,500. And then the last fixed asset is motor vehicles, and that is 53,500. Other examples of fixed assets might be land, buildings, equipment you might see as well. So we're going to total up those fixed assets here, and I'm going to put them in red as well. So 191,000 is the total for the fixed assets. Now we're going to move to current assets. These are assets where the value changes more regularly. It will change in the short term. So the stock at the end of the year will obviously change if they sell some of that stock. And in this question, that's 21,500. Now they don't have a bank balance here. A bank balance is obviously something that you own that changes value regularly, but this company doesn't have a bank balance. They just have cash. And they have cash in hand of 12,500. So we're just going to total up those fixed assets. So I'm just going to add them up here, put a little border underneath it, like I like to do, and bring out my total here, which is 34,000. Now, current liabilities then are debts that the company has in the short term. Short-term debts of the company normally to be paid within 1 year. Now, this company only has one current liability, and it's a bank overdraft. A debt it owes that must be cleared in a year, and it has an overdraft to the tune of 16,500. I'm going to put that out in the second column. If you had more current liabilities, you'd add them in this column and bring out the total. But because there's only one, I'm going to bring it straight out. And the total the bank overdraft is 16,500. So what you do then is you take the current liabilities from the current assets to get the figure for working capital, which in this question is 17,500. And I'm just going to change that to red. Working capital is the money available for the day-to-day running of the company. The difference between what it owns in the short term versus what it owes in the short term. And that gives you how much money it has to run the company from day to day. The working capital is then added to the total fixed assets figure to give you the total net assets of the firm, which in this question is 208,500. And that is the first part of the balance sheet done. What it owns versus what it owes in the short term. The second part of the balance sheet looks at the finance by. How was this company financed? So the first thing is it has share capital. Shareholders have put money into it. Now, for financial regulations, you have to say on the balance sheet what the authorized share capital is. The number of shares the business is allowed to sell. The issued share capital then, the amount of shares the business actually sold. And in this question it is 200,000. That's the figure we're going to be working with. This business, or some businesses, may have long-term loans or long-term liabilities. Debts that they pay off over a year, might be or in a time period greater than a year, might be 5 years, 10 years, 20 years. And they would be included here. And they would be added to the issued share capital. Because a loan is also capital invested into the business. Some people think with a loan you have to take it away. But no, it is capital invested in the business and needs to be added on. This company has no loans, so we take that away, out of there. What it does have is it has some retained earnings, some reserves of money that it has kept in the company, that it hasn't given out to shareholders. And where we get that from is right down here at the bottom of the trading account. The retained earnings are 8,500, and we put those in there. That's the money that's been kept in the company. So the total capital employed, the total amount of capital that's been employed in the firm, or the total amount of money been invested in the firm, is the shares sold in this case, plus the retained earnings, the money being kept in the company. Add those together and I get 208,500. You will notice that the balance sheet is balanced. The total net assets equals total capital employed.